Hey everyone, welcome back. We're going to do a deep dive today on something I know you're all interested in, the Sarbanes-Oxley Act.
Oh, yeah. Definitely a big one.
It's, from 2002.
Right.
So we're going back in time a little bit. But it's still so relevant today, especially when we think about market failures and information asymmetry. Like,
Mm.
how do these things happen in the corporate world and what are the consequences?
Yeah, it's all about trust and transparency, right? Yeah.
Absolutely. And to guide us through this, we're going to be looking at this fascinating article by S.T. Jasso titled Sarbanes-Oxley Context and Theory, Market Failure, Information Asymmetry, and the Case for Regulation.
Catchy title.
Right. So we'll be pulling out some of the key ideas from this article.
Sounds good.
And I think it lays out a really good foundation for understanding not just the act itself, but the whole philosophy behind capitalism and how market failures happen.
Yeah, it's a great starting point. Jasso begins by really breaking down the core principles of capitalism.
Oh, okay.
Freedom, autonomy, self-interest, that pursuit of profit.
Right, the classic building blocks.
But then the article goes on to show how these principles can actually clash and lead to, well, some sticky ethical situations.
Oh, that's interesting. So it's like the very things that drive capitalism can also be its downfall.
In a way, yeah. When self-interest takes over and there's a lack of checks and balances, things can go south pretty quickly.
And that makes me think, how much freedom is too much freedom in a market?
Right.
Where do we draw the line between healthy competition and actions that actually harm others?
Yeah, when does the invisible hand need a little, guidance?
Intervention, even.
Exactly. And that's where the article gets really thought-provoking, I think. Jasso brings in some big names from philosophy, like Aristotle and Adam Smith.
Okay, so we're going way back.
Yeah, back to the roots. And both of them believe that businesses should ultimately be about improving people's lives.
That's a powerful idea. But can a system that's so driven by, well, self-interest really achieve that? Can it truly serve the greater good?
It's the million-dollar question. And I think the Enron scandal, unfortunately, gives us a pretty stark example of what happens when self-interest goes unchecked.
It's almost like a cautionary tale.
Yeah, definitely. And the article really drives home the devastating impact of Enron's collapse. It goes beyond just the company failing. It's about the people. 20,000 employees lost their jobs and health insurance almost overnight.
And that's heartbreaking. Imagine the ripple effects on their families, their communities.
Exactly. And the stock price, which was once $90 a share, plummeted to just $1. Shareholders were left with nothing. Even Enron's auditing firm, Arthur Andersen, went down with them.
Wow. So it wasn't just a financial disaster for the company, it was a human tragedy on a massive scale.
Absolutely. And a perfect example of how market failure and information asymmetry can create this perfect storm for disaster.
Okay, break that down for me. What exactly is information asymmetry?
So it's basically when one party in a transaction has more information than the other. In Enron's case, the executives knew about their risky and unethical accounting practices, but hid that information from investors and the public.
So there was this lack of transparency, this imbalance of knowledge that allowed them to get away with their bad behavior for so long.
Exactly. And that's where the Sarbanes-Oxley Act comes in, trying to shine a light on those dark corners and level the playing field. But we'll get into that more after a quick break. So yeah, the Sarbanes-Oxley Act, it really was a response to those massive corporate scandals trying to prevent another Enron.
Yeah, like trying to build some safeguards into the system.
Exactly.
Yep.
More accountability, more transparency, making it much harder for companies to, hide those shady dealings.
Right. So it's not just relying on companies to, be good on their own.
Exactly. It's about having those rules in place, those checks and balances.
So walk me through some of the key elements of SOX. How does it actually work to achieve this?
Well, first off, it gives a lot more power to those regulatory bodies. The SEC, Department of Justice, even the FBI.
Oh, wow. So they have more teeth now.
Oh, yeah. They can really investigate and prosecute corporate wrongdoing much more effectively.
Okay, so that's enforcement. But what about the whole auditing process? Because that was a big issue with Enron, right? Their auditors kind of looked the other way.
Yeah, absolutely. SOX tackles that head on. Much stricter auditing requirements, making it way harder for companies to cook the books or hide risky practices.
Oh, okay, I see. So it's kind of like leveling the playing field, making sure the information is accurate and transparent.
Exactly. And to avoid conflicts of interest, auditing firms can't provide certain consulting services to the companies they audit.
Oh, that makes sense, like separating the referee from the players. But beyond the oversight and auditing, how does SOX try to like build a more ethical corporate culture?
Well, it puts a ton of emphasis on corporate responsibility and financial disclosures.
Okay, so companies have to be more open about their operations, their financial health.
Exactly. Much more transparent, especially about any potential risks. It's not just about the numbers anymore. It's about giving investors and the public a clearer picture of how the company is really run. And, super important, there are serious penalties for not complying.
Right, like play by the rules or face the music kind of thing. But it still makes me wonder, is this level of government intervention really necessary? Some people might argue that it stifles innovation, that it puts too much burden on businesses.
That's a fair point, and it's definitely been debated. But here's what's interesting. Jasso actually argues that complying with SOX is relatively affordable for most companies, especially when you compare it to the cost of non-compliance.
Oh, I see. So like the fines, the reputational damage.
Exactly. Not to mention, potential jail time for executives.
Right, it's a big risk. So in a way, SOX is kind of like an insurance policy, both for companies and investors.
Yeah, I think that's a good way to look at it. It encourages good behavior and provides that framework for accountability.
And what about the long-term impact of SOX? Has it actually achieved its goals?
Well, Jasso's pretty optimistic. He believes SOX will become a permanent fixture in corporate culture, that it's shaping the future of business ethics. He sees it as pushing corporations towards a greater good that goes beyond just profits.
A greater good, that's a pretty big statement. But it raises a tricky question. How do you actually define bettering society in a concrete way? It's easy to say companies should be more ethical, but how do you measure that?
Yeah, that's where things get a little fuzzy. SOX pushes for transparency and accountability, but it doesn't really spell out what betterment means in practice.
Right. It's like giving someone a map without telling them their destination.
Yeah.
So how do we even begin to assess whether companies are truly living up to this idea of contributing to the common good?
That's a great question. And that's exactly what we're going to dive into next.
So how do we measure a company's positive impact? How do we move beyond just, warm, fuzzy feelings and actually assess if they're contributing to the common good?
That's the million-dollar question, right?
Yeah.
Something a lot of folks are trying to figure out. Some argue that we need to look beyond the traditional financial stuff.
Yeah, like just profits.
Exactly.
Yeah.
We need to consider a wider range of things.
Like their environmental impact.
Yeah, for sure. How they treat their employees, how they contribute to the communities where they operate. It's about the big picture.
A more holistic view,
Yeah.
right? Not just the bottom line.
Exactly. And that brings us to another point Jasso makes. SOX is very U.S.-centric.
Right, it's a U.S. law. But so many companies these days are global.
Exactly. So a company might be following SOX to the letter here in the U.S.
But doing who knows what overseas.
Right. Places where maybe the rules are looser. So how do you ensure ethical behavior across, like, a whole global supply chain?
It's a tough one. It's like, how do you hold a giant corporation accountable when their operations span the entire world?
Yeah, it's like a game of whack-a-mole sometimes. Regulators try to clamp down in one place and the problem pops up somewhere else.
So what, do we need like a global SOX, some kind of international agreement on ethical business practices?
Some people think so. It's a big idea. But it makes you wonder, could SOX be a model for other countries?
Yeah, I mean, it's been influential, but every country has its own context, right?
Sure.
Yeah.
What works in the U.S. might not work somewhere else.
And even here in the U.S., there's still debate about SOX, right?
Oh, yeah, absolutely. Some folks say it's too much of a burden, especially on smaller companies.
But others say it's been vital for restoring trust in the markets.
Right. And making sure companies behave ethically. It's a tough balance.
Regulation versus innovation. Protecting the public versus letting businesses do their thing.
Exactly. And it's only going to get more complex as technology keeps advancing.
I mean, think about cryptocurrencies, AI, all that stuff. It's a whole new ballgame.
Yeah, the rule book is constantly being rewritten.
So is SOX enough? Can it really prevent another Enron? Or are we always going to be playing catch up?
Tough questions. And ones that I think we all need to keep asking.
It's about more than just, understanding a law. It's about understanding the forces that shape the world around us.
The businesses we interact with, the investments we make, it's all connected.
Jasso's article really drives that point home. Capitalism can be a powerful force, but it needs guardrails.
Transparency, accountability, and yes, regulation.
To make sure it benefits everyone, not just a select few. Well, this has been a fantastic deep dive. I feel like I have a much better grasp of SOX now and all the complexities involved.
Me too. It's been a great conversation.
And for everyone listening, remember, this isn't just about one law. It's about a much bigger conversation about the role of business in society.
What we expect from companies, how we hold them accountable.
So keep asking those tough questions, keep learning, keep exploring, and until next time, happy diving!